The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, a new month of trading has rolled in. How did the markets perform on Monday as we kicked off the month of May? Fairly mixed bag. Soybeans, the star of the show, while the wheat market saw more pressure. Here to talk about things with us, joining us today, we welcome in John Heinberg with Total Farm Marketing. John, good to catch up with you. I hope you had a great weekend, and you and I were chatting a little bit off air here before we jumped on the show. Not quite sure how to take Monday's trade. Was it a good day? Was it a bad day? Was it indifferent? A few good things, but also a few things maybe to worry about. What's your thought in this trade?
Well, the wheat market was same old in terms of its mindset today. And then soybeans kind of find a little bit of bid. And then you got the corn market trying to decide which crowd it wants to hang with is what it feels like overall. So, wheat was winning the day for the most part, pulling corn down. And then it felt like the bean market kind of said, hey, come join us at the end of the day, and saw corn come off those lows. So corn's just trying to be a follower, looking for some direction. We got stories on both sides of the corn market right now that can lead us either way here.
Well, I think there's a couple interesting things going on here as we kicked off the week of trade that I want to unpack. And I want to talk about two things on the full spectrum first before we dive into individual commodities. I think for me, obviously the Fed this week going to meet. We're going to get the interest rate announcement we presume to be 25 basis points on Wednesday. So I know Wall Street and the outside markets watching that, but also another nugget too. A lot of our foreign markets are closed today for the May Day holiday. So I'm wondering if some of that sentiment from global traders in Asia and Europe, et cetera, is not being felt in our markets here quite yet to start off the week. What's your thoughts on both of those items, John?
The May Day holiday is definitely something that comes into play possibly here today. We'll have to, see what tomorrow gives us in that regard. Again, these outside markets were a bit of a concern today. You're just kind of watching what's going on. Here we go, another bank failure as we, that one's been brewing here for a little while, but then obviously kind of getting some finalization on it today. Yes, we got the Fed meeting this week. And it's one of those things right now for the stock market, at least equity markets, where bad news is good news, because if we have bad news, the Fed will stop raising interest rates, and there's more easy money in the stock market climbs. So we've kind of seen that lead this rally here, at least on that side. But then the recession fear chatter is still out there. Again, I just saw one of the indexes was gauging potential recession this year at 67%. Well, you throw that into the commodity markets, that's not friendly at all. Maybe that was some of the factor in the weakness in the livestock sector, the crude oil sector today. So there's a lot of moving parts again, and it's just really hard to get a gauge where we are just because we're in such uncharted territory. And then again, what the Fed decides to do this week, there's still some talkers out there that thinks that we got a half point coming again. And if that's the case, you're going to see some major fireworks in those equity markets at the end of the week. So it's going to be another one of those weeks where you just kind of hang on. And as a producer out there trying to get your crop in the ground, just take advantage of opportunities when they come. That's about the best thing we can say to you.
Well, and obviously we've been watching exports as well. That's a piece of this puzzle. And with the corn market, we've seen some of those China cancellations. I know as well, you guys, I'll give a plug for Total Farm Marketing's Grain Market Insider by Stuart Peterson. You had a note in the midday update of that China's PMI data was lower in April than March. That could have an impact on their economy. So just thinking about exports, thinking about China specifically as well. I think that's something that this grain market overall has to be very curious about as we work through the month of May here, but especially corn. And then obviously soybeans are getting a lot from Brazil right now.
Very much so. And again, watching what China's doing on the economic front, that was probably the reason we saw prices kind of tail off on the overnight session. Again, was those lower PMI numbers, and again, that reflects crude oil, that reflects the livestock sector, and some of these commodity space. If the world's largest purchaser is not strong economically, that's going to come have ripple effects throughout. But we did see a couple encouraging things, at least in the grain market today for both corn and soybeans. Those weekly export inspections for corn were a market year high today, 5.18 million metric tons. So we got to see some bushels move out. Now we got to put that in perspective. That's pretty average for this week, with the last 3 years being about the same point. But even though it's still a market year high, so we're still not anywhere we need to be, still down about 35% year over year on those export inspections. But then on the bean side, we had a solid number then in a window where we're typically not supposed to be shipping a lot of beans. China still took some cargo. So again, those sales that we have on the books to China that were so strong in that January, February window are still moving out. And that's encouraging. That's some of the reason we see the strength in the bean market, just kind of reflecting those tighter supplies here in the front end of this market as we're starting to get ready to put the crop in the ground on the back end.
Well, another aspect here as well is all of the fund activity, the fund money. It sounds like funds might be short corn here now. We've seen this corn market back off quite a bit, and I know a lot of folks more worrying corn, I think, than soybeans right now, just with some of the levels and some of the support we've broken through in corn. Is that kind of your inclination as well? Are you a little more worried about corn over soybeans at this juncture, John?
I am. The technical picture, the fundamental picture, both are not quite as obviously good on the corn side as they are, at least for the soybean side here. The funds did move to about a 15,000 net short position here on last week's commitment of traders. Now, remember, those numbers are put together on Tuesday, so they still had Wednesday, Thursday, Friday, and today to be on the sell side before we put together next week's report this Tuesday. So obviously that position, given the way the market handled last week, with the exception of Friday, probably grew. On the same side, that's been the case in the wheat market. They are just pushing this short position they had. They're getting close to an all-time record short here. And actually, obviously, the way the market ended last week, they may be added on another 20, 30,000 contracts. We'll see. So until that money flow kind of turns around, but the perception is, at least in the cereal grains, as global supplies are getting bigger. We got a big South American crop coming online here fairly soon in terms of the Brazilian second crop corn. We got fairly solid wheat production globally with a few hot spots. The Ukraine situation has just kind of moved to the back burner in terms of at least the wheat market at this time frame. And global prices are just reflecting what the market feels, which is there's comfortable supplies, and then throw in some decent weather changes, maybe in those southern plains for us. And it just led to that heavy selling in that wheat market today as the money just continues to push that short position.
Well, and John, I think outside of some of the factors we've mentioned, this market overall in the grains, it's all about weather now at this point. I mean, we got to look here. The next 4 weeks, critical to get this crop in the ground. The northern plains are warming up, so we expect some planting activity to hopefully, presumably, start there here in the near term. It really just comes down to this is going to be a weather market on top of all the other outside factors that are there in grains right now, isn't it?
Very much so. We'll get the progress numbers here and later on this afternoon. And the thing I want to look at again, what happened in the North and the West? I mean, last week with Wisconsin, Minnesota, North Dakota, South Dakota had a combined total of 2% done in corn planting. That was 0 in North Dakota and South Dakota, 1 in Wisconsin, and 1 in Minnesota in terms of completed. Again, the weather overall was not very friendly to get more in the ground, even though the South is moving, or the South and the East are moving fairly well in terms of this planting pace. I think the market's going to start looking at that upper corner and see what gets moving. Prevent plant dates in North Dakota and South Dakota and northern Minnesota is around the 25th of May. That's only 24 days away. So a lot of things need to get moving in that regard. So that could become something that builds in this marketplace. That could be something that comes into the bean market as well if they think some acres are going to convert it over, given that their prevent plant date there is a couple weeks behind that. So it'll be very interesting to see what the report's looking at today. Maybe that's some of the reason we saw a little bit of last end strength here on the market today, even though we finished lower. We got off those lows. going into the close in the core market, maybe the market's just going to anticipate where those planting pace numbers are in that region. And again, that's going to be something we'll need to watch going forward. We already know the South is getting done and the East is getting done, but we need those northern acres just because, you saw it in the strength in the front months. Corn supplies are tight. We still need a crop here in the United States to get the global supplies truly where they need to be in terms of comfortable, despite the South American crop coming at us.
Well, today we are talking with John Heinberg of Total Farm Marketing. John, overall risk management here as we get into the month of May. I know we've hit on this a couple of times just with the way these markets have acted, but and I know as well this is going to vary between old crop versus new crop, but any thoughts, any changes, any updates, just looking at both sides of the coin here, risk management wise with our grain trade as we look at the month of May ahead?
Well, with this last break, especially in the corn market, I'm turning a little bit more negative overall. I mean, we were building some defense through that window. Probably should have been a little bit more aggressive. But I'm going to look at things now. The old line of old support becomes new resistance. So if we do get some run back to kind of those levels that I was hoping we would hold last week and we broke, if you got old crop supplies, you probably want to take advantage of the cash market as long as the basis is friendly. Keep moving those supplies in. New crop side, just set yourself a line and draw a line in the sand and say, I need to get stuff sold. There is still a lot of downside potential, especially if the planting goes well. We get the acres in. If El Nino gives us favorable weather for a good crop, next thing if we produce that trend line yield or we produce at least a strong crop, prices still got a lot more room to go than the downside here, especially given the demand concerns that we have. So I'm going to ask for producers, between now and that Father's Day window, it's typically an area we see some strength in the market. Again, this is a downtrending market right now, so it may be an atypical season, but you got to take advantage of rallies here. We get a 20-cent move off of a low. That's probably a window to say, hey, I got to move some corn. On the soybean side, I'm a little patient right now, just kind of watching November beans. Not thinking we're going to take off and go running here, but that front end supply is tight. Yeah, we get a big supply of beans in South America, but we're watching some of those premium levels that were so detrimental last 2 weeks here to the bean market, with those cheaper South American beans start to firm up. Maybe we're through that window where those beans that were pre-sold or had to move have moved. And now producers are looking at a market that's not friendly to them down there and say, hey, we're going to hold these, throw in the Argentina crop missing, it moves some more, it smooths the pile out a little bit more, throw in our tight supply and the demand that's still here. There's still some room for this bean market to have to produce a crop. And, the USDA numbers on the 12th might still reflect that with a relatively tight supply for beans for the new marketing year.
John, let's talk livestock trade, and I'll start with the hog market. I think overall, cattle and hogs, maybe some pressure from a stronger U.S. dollar. We typically see that on days like this, but hogs, I just wonder if, just couldn't do too many days in a row higher. I don't know what to make of the hog market, but it looked like some substantial pressure there on Monday.
Futures versus cash. That's really what I still kind of look at here. We had a nice run last week, significant gain in that June contract. Obviously coming off those lows, giving back a lot of that today, at least in terms of most of Friday's gains on the Monday's trading session. The biggest thing that's still a concern to me, I'm watching the cash index for hogs, watching the cash market. We rallied out here, and again, we put about a $20 premium of June over the index. And as long as that kind of holds, it's really hard to get overly bullish on that hog market. And we're going to see some wild swings like this where the funds just take money to the sidelines. It's a combination of two different factors. You got possible money flow in the hog market, with the funds still holding a fairly large short position. Maybe they're starting to work out of that position versus the fundamentals and that weaker cash. We are starting to see that index kind of bottom out and maybe round out a little bit. If that cash index can start climbing, that might be the green light, for that hog market to start, pricing into some of this, spring, summer highs, which this market obviously needs right now. But that's still going to be the key between the two, is that cash versus the futures.
Yeah, very, very true. And I think it just feels like in hogs that the fundamentals are there finally to give us some support. How much? I think that remains to be seen here, John. But I agree with you. It just feels like finally the fundamentals are there to help us out.
Again, yeah, we need to see them firm up. We need to see the cash market come together. We need to see that retail value start to climb a little bit more, and then we can get things maybe moving and get that money flow really moving in that hog market.
Very true. Cattle trade, we struggled a bit as well. I wonder if some of that was maybe spillover from hogs, but also just wondering, this cattle market, are we getting a little toppy here possibly? I looked at last week's negotiated cash cattle trade. Sounds like about 57% of that was for nearby delivery with the rest for deferred. What's your take in this cattle market as we start the new month?
The charts do look tired. We got a couple reversals last week, a couple weeks ago. We did rally back and kind of challenge them and failed there, on Friday in today's trade. We do need to see maybe a breakout forming. Right now we're in a consolidation phase, forming a bit of a wedge type pattern here at the top, watching what the cash market does. Now, packer margins are still improved. We saw retail values push through the 310 level at the end of the week on choice carcasses. Cash trade was steady to slightly lower depending on some of the areas. So that just only adds a little bit more margin for the packers. Now, cash trade probably going to stay steady this week as well, but we'll need to see how that trades out. But then we got to see where the possibility is. We're kind of through the retail side for Memorial Day or through the retail side for Father's Day. Do we see some kickback up again as we get a little bit closer to the end of May, as we start looking towards the 4th of July and true summer grilling season? The demand still stays good. I think today, too, a little bit of chatter about recession talk with the bank failure and what the Fed's going to do and money flow all kind of weighed on the cattle and the hog market, too, and just kind of be a limiting gain, because obviously if money's tight, the money's not going to go into beef. It's going to go into other products, and just because. So, but it's a cautious time here. Still got great value. I would be using puts over futures in terms of doing some hedging in this area. At least that way, if you're incorrect in terms of putting those hedges in and the market takes off, you've got unlimited upside or price flexibility to the upside. But all of a sudden, if we see something roll over because of what happens economically here in the U.S., you got some of the floor underneath to capture some of these gains that are out there.
John, how about that dairy market trade? What are you seeing as we kick off the month of May?
We try to get a little recovery here at the end of the month, and we're giving it right back again here today. That market still looks very, very cautious to me. Cheese trade prices are continuing on a bit of a downside. Now, we did get things to firm up a little bit last week. That gap between blocks and barrel prices seems to be narrowed now, so that at least maybe gives us a little more milk market stability. But we just got too much production, not enough demand, bringing to the fact that school years are coming to an end. That's also fluid milk demand that's going to the sidelines for a while, until we get back to next fall. Just doesn't look like a good time right now in the milk market. Again, staying on that slippery slope that we've been doing since basically last September.
Great stuff as always, John. Before we let you go, any final thoughts or anything else you want to reiterate for folks today?
Again, biggest thing is you're busy, you're out in the field, stay active, make those phone calls, reach out to your advisors if you're working with somebody, just stay in front of the markets. Again, this is a time of year that the marketing hat goes to the back burner a little bit, but it might also be that window where you get an opportunity to get something done. So again, just don't fall asleep on things. If you're worried about it and you don't think you have the time, set some targets and let them hit. That's something to always have out there. And when those targets hit, at least you're locking in some bushels while you're out in the field, getting things done here. And the biggest thing, obviously, producers, let's stay safe out there. Rather have you working and being around next fall in cases, over the other options.
Well, John, always appreciate the time and analysis. And I know if folks need some advice from you and the team there at Total Farm Marketing, they could reach out very easily. How can they get a hold of you?
Feel free to reach out anytime, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. Don't forget that website of ours, totalfarmmarketing.com. Again, a lot of great information. Keep an eye on things in a busy schedule.
Fantastic. Well, as always, we appreciate it. John Heinberg, Total Farm Marketing, thanks for joining us here today. Have a great week, and we'll talk to you next week.
Sounds good. Talk to you next week.
That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.